Hey, how's it going? So we're going to be talking about ES today, aka S&P 500. I don't personally trade futures, but again, I'm kind of trying to cover both of these forex futures in my videos because I know a lot of my following it differs. Some of you trade forex, some of you trade futures, some of you trade both. So I'm trying to cover both markets, but really price is price. I've said it before, price is price. It's the same signatures, it's the same setups, it's just different markets. So and it makes a good lesson. So we're going to talk about a few things in this video. We're going to talk about some of the SMC. Um, like I'm sure a lot of you that are familiar with ICT's 2022 mentorship. We're going to go over the setup on that today. We're going to go over premium discounts, dealing ranges, all that good stuff. Okay. So let's break down this chart. So the daily chart on ES, what are we looking at right here? So at the current moment, we are operating within a bullish market structure. You can see it's consistently putting in higher lows, it's consistently breaking highs, trending up higher. So the daily chart is operating within a bullish trend at the moment. We did just close this bearish imbalance right here. But still, even with that happening, there's really nothing on the lower time frame that shows like weakness at the moment. It's still really strong, making its way up higher. Now, once we see a reaction off of that, we could change bias possibly. But at the current moment, it's still really strong, making its way up higher, as you can see. So this morning, let's kind of break down the action on this. All right, so on the 4-hour chart, you can see right here this morning, we actually pulled down into a discount market on the 4-hour chart. So let me see this swing low level right here. This is the swing low right before you had that really nice run up higher with a lot of strength, a lot of conviction on that move up higher. So we're going to take the Fibonacci from that low to that high. And we're going to do what? What do we want to do next? We want to find equilibrium price point. Because remember, anything below 50% equilibrium is in a discount marketplace. Anything above it is a premium. So if we're looking for longs, which we likely are because ES is operating within a bullish market structure on the larger time frame, and if we're really smart, we want to be trading with the overall trend, right? We want to be trading with the tide. So anything below this line right here, below equilibrium, is in a discount marketplace, aka discount equals cheap, and then anything above it, premium equals expensive. Okay, so you can see 4-hour and just really strong. Like I said, it's operating within a bullish structure. Let's go to the 1-hour at this point. All right, so we got a few things here on the 1-hour chart. Again, that green line is just an equilibrium price point from the 4-hour. Now this displayed on a 1-hour chart, and these little orange lines are just day dividers. Okay, you can see it's New York opening price, New York opening price, New York opening price. Okay, so there's a few things worth noting here. What do we got right here? We got really clean relative equal lows. Okay, and what is resting underneath relative equal lows? Sell side liquidity, sell stops. Okay, so we know that area right there is likely going to was likely going to get targeted because that's some really clean lows. And whenever you have really clean lows like that, more times than not in the very near future, it's going to sweep that level. But we also had a couple other things to even add even more conviction to that, and that being the fact that we had that fair value gap right there as well. So on that little push down right there, it filled in a portion of that fair value gap. See 1, 2, 3. On that pullback, it traded down into it, and that's why we had that run up. But it hasn't completely rebalanced that portion of price action just yet. So we have a couple things adding up in here. We have our relative equal lows right here, really clean level. It's going to want to get swept. And we also have that imbalance right there as well. Okay, that price is going to want to efficiently deliver that period of price action. It doesn't want to leave that untapped. Okay. And when we were up here making new highs, now the trend is bullish, market structure is bullish, but when we're making new highs like this, what are we operating within? A premium marketplace. Now, sure, as I've said before, something could be in a premium and it can keep getting more expensive because that's what premium means. Premium simply means expensive. Okay, bullish market structure, but in a short-term premium. So what ended up happening though? Well, 8 o'clock came around. Let's go down to the 15-minute now. Okay. And now I got 8:30 marks as well, which is right here. If you look at my cursor, that's 8:30 when we had news come out this morning. So price did what? We came down. We sweep these really clean lows right here. We sweep those lows and we traded down into that imbalance. So AKA we're in a discount market, right? So we traded down into a discount marketplace and we took out those sell stops on the 15-minute chart. Okay. Now let's go down. We didn't have that entry on the 5-minute. We didn't have that entry there. Let's see, 1 minute. I think it was there. Yep, there you go. I mean, picture perfect. So look at this. You did get your confirmation on the 1 minute chart this morning on ES for a bullish buy setup. So again, this is 8:30 right here. We had that large move lower and we sweep those lows, and we traded down into that fair value gap on the larger time frame that we were just talking about. That's this move down right here. After we sweep that, we took those sell stops out of the marketplace. We waited for liquidity to be taken. Remember, like what I said the other day, I posted this on Twitter. Wait for liquidity to be taken or you will be the liquidity. Again, wait for liquidity to be taken or you will be the liquidity. Wait for those other market participants to get taken out of the marketplace. Let them get out of there and then look for your confirmation. Boom, this move right here took them out. That took them out. And then what's next after we see the other market participants get taken out? What are we waiting for next? We want that confirmation, right? We want that impulse move higher. There's that impulse move higher after the news came out. All right. So you got the news and then you got that impulse move off of that. And did we get our shift in market structure? Because that's what we need next. If you look closely, you sure did. This right here is a swing high level. Highest high in the middle and two lower highs on the left and the right. Let me just remove this for a second so you can see it a little bit better. See that? There's your highest high right there, and then you got a lower high on the left and the right. That is a swing high level. So now we want to see price break a swing high level. It does it right there. And we want to see what created on the break of that level. We want to see a fair value gap created. So let me just remove this real quick. And you see right here, you had your imbalance created on the break of that level. So there's your confirmation. We sweep those lows, we sweep that liquidity out of the marketplace, and then price rallied up, impulse move higher, broke the previous swing level or your swing high level, shift in market structure, imbalance created. There's your confirmation. Now what do we want next? Well, we want to grab that retracement lower, right? So now what we do is we measure this price range, okay? Open, you actually have, here, 1 second, almost missed it. You have another imbalance down here as well. See, 1, 2, 3, 3 candles make your fair value gap. And now let's mark that as well. And boom, you got another little imbalance right there. Okie dokie. So now we want to do what? We have a new price range, or we got this 1 minute price range right here, aka that impulse move higher. And we don't want to grab prices that's just ripping up like this, because it's in a what? It's in a 1 minute premium. It's in a 1 minute premium because we broke that high, we're ripping up. We want to grab that retracement lower in a discount. How do we know when it's in a discount? Well, you're going to take your Fibonacci from this new established price range. You're going to take the low, you're going to take to the high, and you're going to grab that retracement lower back down into a discount inside of your fair value gaps. So you see right there, if you look at my cursor real quick, right there, that is a discount market below 50% of that price range. Okay. I'm just going to remove that 4 hour line real quick so it'll be a little bit cleaner. Just move that 4 hour and then just plot a 1 minute on it. So you see right there, there's your 50% level. And did we get a retracement? We sure did. We traded below, and we actually traded below that 4 hour equilibrium as well. So so that previous line was the 4 hour. We traded below that, and we also traded below this new one that I'll plot on, which is the 1 minute equilibrium price point down into a discount marketplace. We filled those fair value gaps. So there's your entry right there. I mean, just a picture perfect setup. And where could you have kept your stop on this? There's a couple options as for where to keep your stop. You could have kept it underneath of your fair value gap right here. So right underneath the low of that first candle. Or if you want to play it really safe, you could keep it underneath this low, where the impulse swing originated from. That was another option that you could have did. What about for PT? Personally, what would I shoot for? Again, it's kind of up to you. If you want to play it safer, you could shoot for that price swing right here. See that? Look at my cursor, because what's resting above that? Buy side liquidity. We got buy stops above that level that you can target. Or if you want to be a little bit more aggressive, you could target high of day, which is right here, which you would have got both objectives right here. Okie dokie. And I guess some of you might be thinking, what about for a short play? You're talking about a long play, but wouldn't this big flush right here, wouldn't that again, I'm just kind of playing devil's advocate here. Because I know some people might be thinking this, like, wouldn't this scare you off seeing that big flush like that? And what about, because it traded above into a premium market right here on the 1 minute. So let's look at this from another perspective real quick, and we're going to break this down. So some of you might be looking at this flush like right here, and you might be thinking, well, we traded back up into a premium marketplace and we rebalanced all of that price action. So what made you think that it wasn't just going to come down and take out low of day like this? Again, your larger time frame bias is king. Okay, you want to trade with that larger time frame. That's why this didn't hold up like that, because again, overall the trend is bullish. I mean, we already established the daily chart is what, sure, we're trading up into that fair value gap on the daily chart, but there's no weakness in sight for this. It's consistently grinding up at the current moment. Same deal with the 4-hour chart. See how it's trading consistently higher, and then on that pullback right there, you can see we traded below 50% equilibrium of that price range, aka a discount market. There's no sign of weakness on this, okay? And that's what happens. That's why you don't fight the trend, because if you fought the trend, you know, thinking that this big flush right here was just going to change the direction of this thing at that. I mean, it could change here in a second. We don't know. But at the time that this happened, price was still very bullish on your larger time frames. Okay. And then when you get a big flush like this was just to grab those sell stops. Sure, the reaction off of news, but it was, the sole intention was to grab those sell stops and to trade down into that imbalance, the inefficiency in price, to rebalance that portion of price action. After it did that, you got your move up higher, confirmation, you get your pullback down into a discount, and then you could have targeted these buy stops here. So just a really clean play this morning on ES. And again, hopefully you found this useful. If you did, leave a like, subscribe to the channel, and I'll catch you later.